In terms of SVB's failure, do you think we can draw some comparisons to what happened back in 2008?
It's both are kind of sadly tied to mortgages backed securities, but very different.
What do you think the next steps are for the US government? Because
yeah, I think it's all Fed's fault. To summarize it, let's all come to the same page on that. They have to do something, right? Like they have to step in. The difference was just the velocity of things that are moving, right? It probably takes traditional industry, financial industry, 8 to 10 years to go from a bull to a bear. In crypto, it's every 2 years.
What's up, everyone? It's George from Crypto Potato, and in this episode, we're joined by Pei Chen, Vice President of Growth at Rootstock and RIF. Pei is on the executive team at IOV Labs, so we talk about the current developments with the Bitcoin Layer 2 domain, Ordinals, and where the entire thing is headed next. She's also got many years of experience as a product manager at Goldman Sachs, so she walked us through the differences between TradFi and crypto, the ongoing banking crisis in the US and abroad, and much more. Stay tuned, and if you liked the video, please make sure to hit the like button and subscribe to our channel with the notification bell so you don't miss on any new videos in the future. Hey, so before we dive in our more tech and deeper conversation, I'd like to take the opportunity to thank you for agreeing to do this. I'm sure we're going to have a blast. And
thanks, George.
Yeah, just before we start talking more seriously, can you perhaps give us a little bit of information about yourself, maybe your background, what you were doing before crypto?
Absolutely. So before crypto, I was in the traditional finance. I was working at one of the investment banks called Goldman Sachs for a bunch of years. In the mainly spent my time in the fixed income securities division. So if you've heard about the Silicon Valley Bank collapse where they bought a bunch of MBS, that was my area. I was dealing with a lot of MBS issued by Fannie Mae, Freddie Mac, and Ginnie Mae. So it was awful. And so after that, I decided to look for something more exciting and more innovative.
Well, that's fascinating to me because I had no idea. It also comes a bit of a surprise, but what a timely surprise amid everything that's happening right now. So I'd be really interested to know what's your take on what's going on right now with SVB and the other banks like Silvergate and Signature failing. What do you make of it? Why did it happen in general? And yeah.
Yeah, good question. I think so. I think SVB and Signature, Silvergates are two separate categories, right. And they led to the same results, but the root cause was quite different. So for SVB, the primary kind of starting point of the whole collapse is the balance sheet gaps or holes created by the depreciated mortgage-backed securities. So they bought a bunch of 10-year fixed term mortgage-backed securities as the rates went up higher and higher. So the daily mark-to-market accounting practice essentially revealed that there's a growing loss on the balance sheet, right? So once that got out to the market, which is quite public information for traders on the market, that attracted a bunch of short sellers. And one other thing, kind of add on the icing on the top, is Silicon Valley Bank was also a bank uniquely popular, and with the VC funds, the tech startups, right? So those funds are on the internet every day, and they're super informative about what's going on, right? So they read about the short selling information and started to kind of maybe make phone calls to their portfolio companies about the situation. So within, I think, 48, 72 hours, then you saw a huge amount of withdrawals of deposits happening at SVB. And then I think the CEO did not quite calm the market and the clients through the PR effort. So so the bank run started. And the truth is, if any bank in the US or in the world ran into the similar situation once the clients start pulling a huge amount of deposits from their bank, and it's inevitable that they're going to go under, right? So that's SVB. versus Silvergate and Signature banks are more about governments, I think somewhat interrupted or interfered their lending businesses, and both banks are super crypto friendly and crypto heavy. So they're the kind of the on-ramping mechanisms for the US, right? So there's this close relationship to like who they're serving versus how the government kind of took actions against them.
In terms of SVB's failure, do you think we can draw some comparisons to what happened back in 2008?
It's both are kind of sadly tied to mortgages backed securities, but very different. That's subprime crisis, right? Banks start making loans and trenches with clients that couldn't afford the mortgages in the beginning. So there were a lot of like defaults and basically bad debts. Versus here, it's largely associated with the rates. Once the rates go up, the value of the underpinning securities go down like drastically. The faster the rates go up, the faster the value go down, right? So from accounting perspective, your financial statement's going to look like really bad, and then you have to make whole for it.
Right. So essentially, does it really come down to a series of bad decisions in terms of making investments that were perhaps not the best?
Decisions, those decisions were made by the government and by the banks, right? So I think at one point there was a very traditional way of invest with when you have a large amount of money sitting in your institutional account. You do 60-40, you put 60% into securities like stocks, and you put 40% in bonds, right? Bonds are considered as risk-free, but there's no such thing as risk-free today, right? The risk-free MBS turned out to be not risk-free at all. And it's long-term tied, and therefore it's, that was kind of the outcome of it.
So how does one end up from Goldman Sachs in crypto?
I was going through an interesting journey. I started to kind of looking into becoming a product manager, and I felt myself enjoying working with technologists a lot during my time at the bank and doing some innovative projects for the division. And I wanted to work on like one of the most exciting technologies in the world. And I kept hearing the word blockchain from senior, bankers, my friends, and they just like, I was living in New York, Brooklyn, where Consensus was based, right? So it was a huge kind of crypto blockchain surrounding. And I think it was very naturally, I started like running into people who kept like recruiting me to join the darker side of the world. And finally, I actually joined the Consensus. And the primary reason for me to join Consensus was because the commute to the Bushwick office was like 10 plus minutes car drive instead of getting on the subway and, back and forth between Brooklyn and Manhattan. So it was like, this is great. This is amazing. And it was a huge lifestyle change, but like, I didn't know that was also going from one end of the spectrum into the other, because the world of crypto, especially at Consensus in 2018, was just crazy and super dynamic. So
apart from having to travel less, what changed for you when you started working in crypto compared to what you were doing in traditional finance?
I would say the biggest difference was just the velocity of things that are moving, right? It probably takes traditional industry, financial industry, 8 to 10 years to go from a bull to a bear. In crypto, it's every 2 years, 2 to 3 years. And every cycle, with every cycle, you see fantastic, just amazing new technology, and different parts of the ecosystem would take the lead, and you see new things. It's like mostly unexpected as well. So it's like super surprising, super unpredictable, but in a very positive way. And I love the nature of the industry, the nascency, the fast pace, and just, there's no set rules. There's no such thing as you're a veteran, because you can be as experienced as 10 years, like max, right? I think mostly saying like if you've been in the industry for 5+ years, you've been through 2 cycles and you're much more experienced and weathered, more resilient probably than the average crypto guy. So yes, I love all of that, just the dynamic environment, the fast pace, and also kind of the innovative nature of it.
Okay, can you tell me
the decentralized innovation too, right? It's not just driven by one company or one actor. It's collective intelligence.
Okay, can you tell me more about your current position and what you do?
Yes, absolutely. So I'm VP Growth at IOV Labs, and IOV Labs is the company behind the original company behind Rootstock and Riff. So Rootstock is a set chain on Bitcoin network, and Riff is you can think of it as a layer 3 product suite of protocols, the building blocks that you can build applications, platforms on top of Rootstock, but also any other EVM compatible chains.
So we use Riff, the RSK infrastructure framework, to build tools. Then we deploy on Rootstock, which is the side chain to Bitcoin.
Correct.
Okay. So there is one sentence that caught my attention on your website, and I'm going to read it because there is a lot to talk about there. So it goes like, Rootstock shares the security and decentralization of the Bitcoin network through merge mining technology. All smart contracts on the network are EVM compatible, combining the programmability of Ethereum with the security and stability of Bitcoin. So first, let's start with how is it possible to run smart contracts on Bitcoin? Because I've been told this is something that the Bitcoin network doesn't have the capability to do. So how do you guys pull it off, and how do you back these smart contracts with the security of Bitcoin?
Yeah, without becoming, getting into too much of technicality, right? The way that Rootstock is structured, right? There's 3 main components. At the very bottom, it's the merge mining mechanism, meaning that the network is secured by the same miners that mine Bitcoin network. So over 50% of hash power kind of also contributes to securing the Rootstock, making it the most secure foundational platform, blockchain platform. And there's on the top, which is the smart contract layer. So this is simply a fork of Ethereum virtual machine. So programmers use Solidity to code smart contracts, just like how they do on Ethereum. And in the middle, there's POPAC. It's a federated bridge that connects the Bitcoin network to Rootstock from an asset perspective. So meaning there is if you have 1 Bitcoin on Bitcoin network and you wanted to tap into the DeFi ecosystem developed using the smart contract platform on Rootstock, you need to kind of convert your BTC to RBTC, which is the BTC on Rootstock, where you can call it smart Bitcoin. And the federated bridge, we call it POPAC, proof of work pack, actually does the job, right? You can basically lock BTC and release RBTC, the equal amount, 1-for-1 on Rootstock, and then you start doing everything that you can do, just like how you do on Ethereum, but with different DeFi protocols.
Right. So I'm taking one, just to sum it up and to see if I understand it correctly. I'm taking 1 Bitcoin, like regular BTC, and then I'm running it through your bridge, and then it converts to a sort of a synthetic BTC.
Correct.
Which runs on Rootstock, and I can use that BTC to do whatever I want on Rootstock.
Exactly.
Right. And how much time does it take to bridge between Bitcoin and Rootstock and vice versa?
Right now, so we have the traditional way, but we also have an expedited way. The traditional way will take, I think 15 to 24 hours, something significant, but for the right reason, because that's how you provide secure transformation, right? Like there's no central custody in the middle. So it requires the peg notaries who federate the bridge to reach consensus and do the transfer, do the kind of the syncing process. Going back is also not controlled by any specific party, and it will require a similar, slightly maybe longer process. That's the traditional way. And there's a faster way. It's called a flyover. So if you Google flyover protocol by rootstock, you will read a bunch of the details. We're very excited to bring that to the market in the coming weeks or months. So essentially that will shorten the process, both packing in and pack out drastically. And the reason we could do that is essentially we provide a liquidity provider smart contract component. And so that we introduce LPs so that LPs can basically advance the RBTC or BTC the other way around, right? So it's also designed like with security at the central component. And there's no central like control of it, but it just makes the whole process much, much faster.
Right. So essentially rootstock is enabling certain capabilities which are currently not possible on Bitcoin. For example,
exactly.
smart contracts.
Yep.
Right.
Yep.
So
it's the most direct way to provide that programmability directly on Bitcoin, right? Like you can, there are other very active ecosystems and protocols that are trying to achieve a similar goal, but it was just impossible or very, very difficult to do. And so there are different ways to approach this, but for people who own Bitcoin and do not want to convert it into other tokens because there's downside risk of giving up your Bitcoin at any given moment of your life, then this is the way to go, right? Because it's not like you're swapping it for a different token. You're just simply locking it on the Bitcoin network, and then you release it to generate yields or to acquire assets or to do transfer, payments to your friends, families, for instance, like the real utilities without actually kind of trading off your Bitcoin.
Is it something like, is it an appropriate analogy to say that RBTC is something similar to wrap Bitcoin on Ethereum, the WBTC thing?
So WBTC was issued or designed by BitGo, and the BitGo is a custodial entity, and then you have to put the trust and faith in BitGo in order to make wrap the BTC work. And I think the origin story or the original kind of traction that WBTC was able to create was also through attracting the large holders of BTC, right? That they were looking for ways to put the Bitcoin to use, and they couldn't see any better options. So they saw WBTC that can help them tap into the Ethereum ecosystem. So therefore, huge amount of transaction just happened, but it wasn't really like a decentralized or secure way to do it.
Right. Whereas with rootstock, the RBTC is on chain, and I keep custody of that, right?
Exactly.
Right.
Correct. Okay. 100%.
Right. So do you think that at some point, because if we take away the past couple of months with all the hype that's going around the Ordinals protocol, I don't think anyone was talking about DeFi on Bitcoin, or at least not to the same extent that they are now. Do you see DeFi on Bitcoin being supercharged in a way that it got on Ethereum? Because we can say the same thing about Ethereum, right? Before 2020, before the madness around DeFi summer, and when Uniswap came to prominence because it was created before that, but before that, it was only the crypto natives using decentralized exchanges and all that. But after that, suddenly everyone flooded the DeFi market, and we saw one of the craziest things that I've ever seen. Do you see something similar happening to DeFi on Bitcoin?
I already see, I've already seen real meaningful impact that Ordinals have done to the Bitcoin ecosystem. And I think it's a controversial topic, to say the least, but just take a step back and look at Ethereum. And you're right in pointing out that 2020 was kind of the dividing year before DeFi was just kind of a thing, a topic, to it's a phenomenon, right? And I remember very clearly when I watched that Saturday Night Live show talking about NFTs, and that was kind of the starting point of mainstream you just start hearing about it on the news and TV and in shows, right? NFT, ERC token based NFTs was definitely the biggest driver to the mainstream attraction to Ethereum. Like it or not, it shouldn't be the best use case, but it is, right? And it also was able to kind of unleash the imagination of the public, what can be done, how they can participate in the economy. So I think the Ordinals is sort of going in a similar direction, but even in a much more powerful and more in a more kind of technical and intellectual way. So if you have to think about from a product design perspective, the Ordinals is a inscribed NFTs versus ERC token-based NFTs are URL-linked tokens, right? So what's the big difference? What's the big deal is the Ordinals essentially inscribed to a specific Satoshi, which is the smallest unit of a Bitcoin. And it's a very unique, right? The data is stored on-chain. You can add to, a beautiful image or a video to it, but make it unique and has it, make it have its own identity. But it is that unique thing. You can't just link an URL to it and say, this is my NFT on chain, right? Versus the Ethereum-based NFTs are, you can remove the URL anytime, and you can mint a batch of NFTs overnight based on the collection or real world art or assets, and then link them to it, right? It's there's no real scarcity there. I mean, I think the public won't be like come and like piling on me, but that's from a technical perspective, that's the case. That said, from the non-technical perspective, I think Ordinals at least brought a lot of good attention to the layer 2 on Bitcoin and giving that new hope of perhaps functionalities and use cases can be built on Bitcoin and they don't have to be boring or dry, right? So this could be fun. Bitcoin could be fun. Bitcoin can be more than a boomer token. It can be more than an investment hedge. And fun stuff could happen, and you should come and explore. This could have like really colorful kind of outcome as well. So yeah, actually, I think if you look at the markets, Bitcoin's been up a lot. I think partially due to the SVB and all the traditional banking crises, but also those top trends such as Ordinals or Nostra or roll up the Rollkit project, and all of those things are super strong signs of there are new developers getting back into crypto, those who left, and or new developers from Web 2 are joining in to take a serious look at Bitcoin. And the layer 2 ecosystem on Bitcoin is still super young and super small. So there are, maybe you can count with, one hand, right? There are a few projects that are have been very consistently and very committed to building on top of or next to Bitcoin for a while now. And I think this is super good. And then in terms of like NFTs, we've tried to launch some marketplaces before. Carnivals, for instance, it's a marketplace for NFTs. For the Latin America-based artists, it was launched on Rootstock. We have Taringa. It's the largest Spanish language social network, and they offer NFTs. And we have a marketplace solution on, empowered by Riff as well. So you can build anything that you want. And Ordinals is just it's the asset, but it needs a lot of infrastructure around it to make it actually a success, right? So talking about a special wallet and a special marketplace that can enable the custody, the trading aspect of the assets. So I think, a lot of developers have reached out to us, actually, like expressing interest of building such infrastructure. So this is all super positive.
It's also super quick. I would like to go back to what you said about the velocity of the crypto industry and how it's different from traditional finance or traditional fintech or whatever. I got interested in Ordinals perhaps towards the beginning of February, so last month, and it's been a thing for a couple of months already. And back then, the only way to interact with the community was through Discord. I think it still is. And then if we wanted to buy and sell ordinals, we had to do this from those spreadsheets. So on the one side you will have the bids, on the other side you will have the asks, and then you have to match bids with asks, and then a third party would custody our NFTs for us, which really takes me back to the days before SushiSwap and everything existed. It's kind of cool, but also it's been like about a month and a half since then, and there is so much infrastructure already created in this short time span. Like there are now easy to use and friendly wallets. Before that, it was like the Bitcoin wallets were not that easy to set up. It was not a MetaMask like experience, right? Whereas now we do have these things. There are some marketplaces which, as you said, help transact with ordinals and with NFTs. It's just mind-boggling how quickly this space is moving. And it's so easy. Yeah, it's so easy to lose track of everything. But do you think ordinals can get to where NFTs are?
I think it really depends on how committed the infrastructure side of things, the momentum it's gathering, and I have no doubt this is going to last for a long time. I mean, given the fact that the project was started in December last year, and the first month is always kind of like, it's a bit awkward and it's a little bit not so exciting. But by the end of February, it has minted or inscribed 90,000 unique NFTs, right? And that growth was just unprecedented. And so that gave a lot of faith, and that draws a lot of interest and talent to come and look at this thing very, very closely. And one of very friendly mining pools to us, Luxor, and then quickly acquired Ordinal's hub. So I'm sure there will be more infrastructure being developed after the acquisition. So going back to the company's mission, IOV isn't necessary in the place to kind of only follow the trends and the topical things in the space. We are here to serve the entirety of the population, right? We wanted to deliver real, everyday type of utilities. We have everyday DeFi as our market vision. What that means is that we believe the true adoption of crypto needs to be so deeply embedded to the user's day-to-day needs, right? Like a simple payments, transfer, saving, protecting from inflation, hyperinflation, now more and more in different countries. Those are the type of things people breathe and live every day. And only when crypto reaches that level of utility, it's not called a mainstream adoption. Like inevitably, it will be speculative, and only for advanced users like you can figure out how to acquire ordinals. Like I would say 99% of the world population could not figure it out, or did not have the bandwidth or energy to go and figure it out, right? So how can we actually make it super easy for the majority of the population to participate in this exciting new financial system? Is kind of ultimately our goal.
So in other words, what you're saying is ordinals are cool, but there are also a lot of other important things that you guys are focusing on and not just following that trend. Yeah,
I think the only thing that's not going to change in crypto is changes, right? It's every day you're going to have a new topic, and you're not going to change your roadmap. Every company has limited resources and focus. We're not going to chase everything that passes by us that looked shiny and nice. But I think one of our current strategy also is about not just rely on the internal talent and resources, but also really open up to allow the community and the ecosystem to build whatever they want with our technology, because Rootstock is fully community owned, decentralized, and permissionless. You can build any use cases. If you think a use case that is on Rootstock and has something to do with ordinals, like come and build it. Like we will, welcome you into our ecosystem. We'll support you any way we can. because that's the true spirit of crypto, right? It's decentralized, and it's for the public.
And what is the connection between IOV Labs and rootstock and the layer 3, as you put it, RSK, the RIF thing? Yeah.
So IOV was initially so IOV is a trust, and it was created to help with some operational tasks like funding, supporting, developing tools in an organized way, and have a mission so we can guide our energy and technology towards a specific direction that we think is beneficial for, and it's helping us reach our vision, which is essentially creating an open, equitable, global financial system for everybody. So during that process, rootstock was ultimately kind of became the foundation that allow everybody to build and use the DeFi services on Bitcoin. So we just with rootstock we focused on technological advancements and making sure that it was ready to be fully decentralized. And this year we just made that happen. So super excited about that. And then RIF is currently under construction, I think reconstruction, and we're gonna launch it very soon in the next month. And so if you guys are around, like in Consensus, feel free to come talk to us. We'll be talking a lot about the specifics of the product suite and the roadmaps of RIF. That is, ultimately, our end goal is to make RIF protocols also very, very open and public, so that it's self exploratory, and then it's straightforward. So like the community can use those building blocks to build applications and platforms. So we're working with a few alpha or strategic partners right now, so that they can actually use what we're developing. Super early days, right? Like they're just using what we're building and just to launch their own platforms. And we're doing everything kind of like it's a very open, transparent, and flexible way. The main goal is for to have the protocols to be adopted by strategic and the competitive, competent partners, so that they can bring the technology to the world, and we will serve their end users in that way.
Okay, and what do I need the RIF token for?
So RIF token was so we're doing a bunch of also rethinking of the RIF token utility. Mm-hmm. It's token economics has come a long way, and right. back in the days, it's all about tokenomics, right? Economy. Right. 2018, it's all about like how you design the allocation and incentives around it, the governance, and since it's gone on a different, it's kind of become its own life. You've heard a lot of words like utility token, security token, governance token. I don't know, there might be some other words about it I can't recall right now, but token is kind of like a perpetual concept that the people is very fascinated by. In our case, I think RIF can be a lot more than what it currently is. Like we have products like RNS, which is rootstock name service, is a product that is you can buy with RIF, so it's kind of like underpinned by it. But there are also other things like RIF relay. It was kind of going the opposite direction, because we want users not have to use a RIF or RBTC to use our services. And we're thinking about other token economics that can actually tie the RIF to make it a core part of the product soul, so that this is all the RIF product suite is all about, right? Like it's not only about the technical functionalities, but also about the incentives tied to tokens in our ecosystem, and how that's going to kind of benefit the users, make it transactions cheaper, more affordable, and give them also the upside through incentives.
Do you have some sort of a timeline that maybe you can hint at? When do you think you will reshape the tokenomics, or is that
the sooner the better? The sooner the better. I think with perhaps not the initial during the initial relaunch, but hopefully soon after that. And it's also like an ongoing process, right? Like we were actually welcoming any ideas as well in the meantime to come to us and give us some thoughts and ideas. I think it's going to be a very interesting, and hopefully it's a like collective effort, not just by, I think any one company cannot fully explore the functionality of a token. And you've seen, a lot of ecosystem have attempted it and didn't quite achieve it. You saw that happen to Cosmos and, perhaps other other ecosystems also right after that, right? Like it's not an easy task.
Thank you so much for doing this. Can you tell us where we can find you, like social media?
Absolutely. So our company website is rootstock.io. And you can probably go from there, find the links to IOV Labs and Riff as well. My personal Twitter is PEICHEN01. So Pei Chen 01 on Twitter. So feel free to follow me and shoot me a message.
Okay. Well, once again, thank you for this.
Thank you, George. Pleasure.